Example of the kind of property we'd be looking at. This is an office building in Shelton, Connecticut. Class A office space, 46,000 square feet, 90% leased. The asking price is $5.4 million. The net operating income was the stated net operating income. We didn't do due diligence on this. Is $481,340, which gives an asking cap rate of about 8.9%. Now, if we would just buy that property as is, assuming that all the due diligence checked out, we didn't negotiate anything, we didn't take a lease or take a mortgage or anything like that, what would that mean to our investors? In year one, the property throws off $481,000. That's 8.91% to our investors. With just the normal escalations in the lease, after 5 years, it's up to 9.87, and after 10 years, it's up to 11.2. Now, that's just the cash-on-cash payout. That's only half the story. This is where the beauty of real estate comes in. I'll ask you right now, where could you go right now and get 9% on your money? No place. No place I'm aware of. Okay? Plus, we've got some real opportunity for enhancements. We're looking at, we can probably, if we're going in, especially if we're going in as an all-cash buyer, we can probably negotiate a lower purchase price. There's some upside there to get the cash flow up by filling up that property. And we say 97%, that means that doesn't mean there's always 3%. You've got 10 now, and you'll go to 0, and you'll go to 5, and it jumps around depending on the tenants and the spaces. And most importantly, the opportunity for capital gains. Cap rates have just all over. Ron alluded to in his opening comments. A property today that you can buy for 10 cap rate was selling 3 years ago at 6, 6.5, 7 cap rate. Cap rates will come back again. I don't know when, but we know from the, and that's the part we don't know. We don't have, my crystal ball, Alan's crystal ball is no better than anybody else's. It's as clear as a bowling ball. Exit strategy. We'll continually evaluate alternative strategies to maximize our participants' total return. We'll look for all the potential return enhancements and keep looking at the exit strategies. And of course, like I said, our bowling ball is not any, our crystal ball is not any clearer than anybody else's. It's going to look at macroeconomic factors and property-specific factors. We know the market goes in cycles, and the market will continue to go in cycles. And our children and our grandchildren and their grandchildren will be dealing with cycles. And while we as Sabre Equity Management will maintain control of the property, all of our major decisions regarding enhancements and disposition decisions will be done with complete transparency and a collegial manner. Talk about transparency. I have a couple of friends who are in REITs, real estate investment trusts. The biggest complaint I hear about everybody that's in a REIT is the lack of timely financial information. They don't know what's going on. They don't know how well the building's rented. They don't know if the bills got paid last month. We plan to address that through our 2X transparency system. And very simply, you'll have a logon and a password, and you will have, over the internet, you will have 24/7 access to the books and records of the property, along with your regular reports and your monthly checks. It kind of goes what President Ronald Reagan said, trust but verify. Obviously, you're not going to invest with us if you don't trust with us, but we want you to be able to verify that at any time. So what are your next steps? If we've managed to pique your curiosity tonight and you'd like to learn more about our project, simply complete the qualified investor forms. Alan has those. It's very simple. It just certifies you that you're a qualified investor and we don't have to go through the SEC to talk to you. Upon receipt of sufficient number of indications, we'll contact you to review our first property. We may do it in a seminar like this. We may do it one-on-one. We may do it through a teleseminar, just depending on logistics. And nobody is committed to anything at this point other than learning more. That's all we're asking for tonight. Do remember that this type of investment is financially appropriate for 401 and IRA type monies. And if you're interested in that strategy, Alan has identified a couple of strategic partners, namely Pensco and Entrust, who make the process very easy. They're third-party custodial facilitators. They have no active involvement in the investment or investment decisions whatsoever. So for those of you that thought we were going to try and sell you something tonight, we're not. This is pretty simple. Sabre Equity Partners represents a unique opportunity for the smaller and less experienced real estate investor to benefit from what may be the greatest real estate opportunity in a generation. Convert a cap rate into cash returns in the range of 6%, paid monthly. Long-term yields will be significantly greater through enhancements in cap rates, capital gains. Real estate presents a very secure long-term hedge against inflation, and we provide the flexibility of enhancements and exit strategies. So very simply, if you'd like to participate, and all participate means is to learn more, complete the accredited investor questionnaire, pick up a copy of our business plan. Alan has them right here. Alan, Vanna, would you hold those up, please?
Can I say something? This is not a private placement offering. We call it a business plan because it is like a blueprint of our private placement offering. Our attorneys here at Robinson & Cole, once we identify a property, will put together a private placement following the blueprint and adding, instead of the sample, we'll add in the actual property. So we wanted to make this available to you, to accredited investors, so that way you know what to expect when a private placement is available.
Okay. If you all have any questions, we'll be around for a little while. I'm sorry, go ahead, sir, please.
In some of your written material, I just want to clarify something. On some of the properties you show asking cap rate. I assume that's a cap rate based upon the asking price and the current NOI.
And the stated current NOI.
Based on what the selling broker is stating.
Okay.
Now, what that list is about 12 properties in that list. That's 12 potential properties. You talked about kissing a lot of frogs. Those are 12 frogs that starting next week we plan on going and getting very intimate with. We're going to try to narrow it down to 1 or 2 of those that we think fit all our criteria, will make a good investment, and that'll probably be our first. One of those will probably be our first deal.
When you narrow down, what do you do in terms of looking at the stated NOI? We look at the books, I assume.
Absolutely.
Okay.
Look at the books and look at the books and records. Look at the leases themselves. Look at the payment history.
And in the books, we want to look at the bills and we want to look at the leases.
And then put it into a standardized format. Because, I mean, you see these all the time, these desperate realtors, and they'll come up and say, I've got this great property for a 14 cap, theoretical. It's half empty, and we're asking a 7.5 cap.
You want $40.
Hit the road, Jack. So you got to do your homework. I mean, we didn't fall off the turnip truck yesterday. And there's plenty of legitimate professionals out there, and there's some hucksters out there. So, buyer beware. That's where we earn our paychecks, sir.
Even the legitimate professionals, they can only rely on what their client is telling them. And you got to dig deep into these things to figure out what's really happening.
Yeah, I love these ones. 5,000 square foot property on great location. Price not disclosed or income not disclosed. Okay. It's like going on a blind date without your friend knowing who the blind date is. Just doesn't work. So at this point, real simple. If you have the notes, you have our email address, you have our phone number.
And a note about